Economic depression any day now? Chamath Palohapitiya. Welcome to Cash Street, where cash is always king. The action you must take before discussing the current situation. Because a lot of people who came out of the great financial crisis were confused about what the US government and some European governments were doing, I think it might be helpful to go back and really start at the end of the crisis. At that point, I believe there was the possibility of significant financial contagion. As a result, the United States intervened and the Federal Reserve began using its balance sheet to purchase toxic assets. The European Central Bank followed suit, as did Japan, I believe, and a number of other governments. Then there was a group of pseudoscientific economists who came up with the term modern monetary theory, which basically said that you could keep printing money and putting it into the economy to smooth things out and actually drive growth over the long term. And it turns out that a lot of people in the government fell for it. And if you jump ahead 14 years to 2022, governments all over the world had printed somewhere around $30 to $35 worth of money into the economy that shouldn't have been there. So, keep in mind that when we talk about a recession or inflation in the last 6 to 8 months, we haven't just been obfuscating true supply-demand. We have actually been doing it since 2008. The problem is that it has been accumulating in the system. So something that we need to acknowledge is that all of that cash some way or another requirement to get obliterated somehow or another shape or structure, assuming the genuine monetary balance is intended to be found. What exactly are supplies? What exactly is demand? Unless the government spends money trying to support things that shouldn't be supported, buys votes, or engages in any of the gifts that these individuals have engaged in over the past decade and a half, it must be undone. That is the background, so when you consider removing $30 trillion from the global economy, you are aware that you are discussing almost $85 trillion or the global GDP, I believe. Therefore, considering that it amounts to nearly half of the global GDP over the course of a year, it is likely going to take 3 years of meticulously withdrawing existing funds and not introducing new ones. Therefore, regardless of whether we are in a recession or not, the bear market that we are in gives the impression that we are at the beginning of something that will last a long time. Right, and as a result, asset prices today must be seen as a microcosm of a much larger trend that must involve fake money pushing asset prices up and now removing all that fake money to determine the true price of something. In addition, I do not believe that takes 6 months. So for all of the people who were keeping their fingers crossed in the hope that this would be the end of it, taken care of raises 75 were finished with this, they will raise 75 more. I just don't think that will be the case. It will probably take 24 to 36 months, which could mean that the bottom won't appear for another 18 months. So I believe it's we're in for a ton of uneven market activity. We may not be negotiating with Russia, but we are allowing them to print enormous surpluses, as evidenced by the publication of an article earlier today. Janet Yellen is basically going around the country trying to persuade people not to include Russian oil from a lot of import bans, so that these Russian oil tankers can be insured. Why? So that they could sell this oil to China, India, and other countries. We've pushed for this large number of approvals. Europe jumps aboard and says we will get it done and we will face the facts, and afterward, we circumvent Europe and essentially say, well, we sort of need to battle this intermediary war, and yet we need to attempt to fix the expansion, and we didn't intend to cause this, and it's totally disordered what's going on. Okay, here's the thing. I believe we must also be aware of the fact that the Federal Reserve relies on a particular type of data, which in the 21st century is pretty pathetic. An article that really explained how CPI is calculated appeared, I believe, in the New York Times. In it, government employees were shown walking around the country with iPads, forming relationships with local businesses and other random locations, and then asking them to fill out surveys for 15 minutes. Now, you would have thought that the government would have told Visa, MasterCard, and American Express about all the banks and Stripes payment rails in 2023 or 2022. Send me a feed structured in the following manner so that I can have a precise understanding of inflation, because inflation only occurs when a good or service trades hands for money and you calculate what that thing traded for the previous day and what it trades for today. so that you could get an exact sense of it rather than using random sampling. Assuming you read this article, your focus point will be, wow, this is exceptionally shaky, and it drives a tremendous sludge that we use to attempt to deal with the economy. That is the principal thing. I believe you should fasten your seatbelt because the CPI readings for the next 3, 4, or 5 months will probably be very bad. 7, 8, 9% of the reason why some components have completely vanished. Number 1 is rent, which is the most important one. Because rent has a 3-month lag, we are going to reintroduce the true owner's equivalent rent into the CPI so that we can already anticipate that the CPI will rise. By now tampering with their nat gas supplies, Russia is essentially attempting to break Europe's back. Yesterday, the German Minister of Energy said that if that happens, it could be like Lehman Brothers' energy contagion. When all of these factors are considered, the end result is regrettably exorbitant costs with no real mechanism for recoupment or control in the absence of genuine governmental policy or change in the Ukraine-Russia war. You are aware of our plans for working, collaborating, or fighting China. These issues must be resolved. Therefore, in the absence of that, prices will continue to rise. The question then becomes, what does the Fed do? How does it throw away what little credibility it has left when there are inflation prints of 8% and 9%? You can't do that. Because there will be so much pressure on them to act, they will overcorrect. I believe that all paths lead to lower equity prices. We have witnessed the initial wave. However, it now needs to affect all of these other areas. For instance, as a nation, we have completely become dependent on debt. One of the clearest spots where we've been serving liquor and reasonably some time later isn't the funding of every one of these confidential value influence buyouts. These are questionable businesses that occasionally seem to be on the verge of going bankrupt. When private equity enters the picture, they add debt to the balance sheet, price it to the very edge of what is permitted by law or what is feasible, and then they go ahead and do it. All of this assumes that the economy will continue to expand. Therefore, if suddenly there are recessionary forces or prices rise but earnings do not, there could be a contagion in the commodity market as well as a contagion in the debt markets. Therefore, we face some extremely challenging boundary conditions. I do believe that we can learn these things without sampling in such a porous manner, and you are aware that we will look. For years, we have used a system that overcorrects and undercorrects. The problem is that as the economy expands, gets more complicated, and we have more leverage, the stakes keep getting higher. Also, I'd like to tell you a brief story about one of the most interesting canaries in the coal mine of this whole thing. What happened to Facebook 2 days ago? This kind of ties a lot of this stuff together in terms of inflation, asset prices, and stocks. On Tuesday, the market was up about 250 basis points, 2.5. The S&P was up about 300 basis points roughly, and the Nasdaq was also up, but Facebook was down about 400 points. Everyone was saying, oh gosh, the market's going to rip into the open. So why is there such a wide spread? I thought, this makes no sense to me what is going on with this price. Actually, Apple and Google were both up, so I called around and asked, why is this happening? And received the best explanation. When you look at who the incremental buyers in the stock market are, you can usually tell whether prices can go up or will continue to go down. The retail market tends to be the most knowledgeable buyer, while these very large institutional hedge funds tend to be the most knowledgeable buyer. Therefore, there is a spectrum, and Facebook is an illustration of significant technology that is poorly owned by retail. Therefore, the majority of its ownership is held by smart money who argue that Facebook's extremely low price-to-earnings ratio justifies its ownership. So, you have to own it, and they said that by looking at consumer demand trends, they had re-understood that Facebook's PE ratio was not low, rather it was wrong. If they pass through all of these increases in inflation and their earnings expectations into Facebook, it is actually more like fair value at a lower price, which is why they sold it so much on a day when the market was up. Now, why is this important? Because you will eventually have an impact on all of these other stocks that will see earnings revisions during this recession. This is where, in my opinion, Wall Street has failed retail very badly. If you look at the average earnings estimates, you will be surprised to learn that Wall Street actually predicts record earnings for next year. How do you anticipate earnings to continue rising in light of such prints? When you can't keep up with increases in energy, gears, and other things from 80 to 90, you will have to sell fewer things because fewer people will have jobs to buy them. Wall Street is wrong, and I believe that earnings will fall this year and indefinitely in 23. I believe that the entire equity market will need to be repriced lower, which will put a lot of pressure on these cash-sucking, non-profitable tech companies. A member of the government acknowledges that you must really ring the fence and protect consumers. The securities laws are meant to protect consumers at all costs, but the reason is that sometimes you want people to make good decisions, but if you give them a lot of money, they'll just spend it. We gave people a lot of money and they acted logically and spent it. Now that we have to deal with everything, I don't think that it will be as simple or easy as people think. It is amazing that you are aware that the increase in the M2 money supply was actually linked to the stock market's dollar for dollar rise. Since the correlation was 0.92, the stock market increased by 92 cents for every dollar the Fed printed. Therefore, it stands to reason that we will need to rewrite the equity markets by $3 to $5 trillion at a minimum if the Federal Reserve is going to take a $3 to $5 trillion of value. Additionally, you will need to re-rate or re-baseline for earnings, which will likely add another 20 or 30%. You are assuming that all of a sudden, demand is stable. However, demand is not always stable. In a demand contraction, people do get fired, but new job openings also change. There are fewer of them, and they are more specific. Again, we are at the beginning of the beginning. This was a 4-year period of absolute hell and hardship for every one of us who survived 2000. People suddenly assume that 2 or 3 rate hikes and 5 or 6 months of headlines are sufficient when we now have $30 trillion to work through the economy, overcome a recession, and end a war. It's possible that they are correct on the margin, but from my point of view, it's an observation that we are only at the beginning of something that fundamentally must take some time to work its way through the system. As a result, I find it difficult to comprehend why anyone would give up their liquidity right now. How could you? Why I surrender $100 million of money in my ledger, I wouldn't do that. During this time, people in Russia suffer and people in Ukraine are murdered. How does it end, I thought? First, Biden engaged the United States in a proxy war without explicit discussion. Second, we pulled back and pressured Europe to really draw a hard line, but now we're kind of working around it, so Europe is suffering the most. Now that the group of European leaders, including Macron and Draghi, traveled to Ukraine last week, I believe you're beginning to see the signs. If I had to guess, I think the message was that we needed to organize a protest because Europe says that the economic contagion could happen in the next few months in a way that looks like Lehman Brothers. Therefore, I believe that the goal will probably be a more coordinated ceasefire and negotiation. I don't figure anyone will be content with it. However, I think overall Russia is and has won. You realize the significance they've won monetarily. They're selling oil like it's not becoming dated. It is not selling it to Europe or the United States. Instead, it is selling it to China, Africa, and the countries against which we impose economic sanctions. I was the first to suggest that this could work and be a guide for how to proceed, but it turned out that this is the guide for how not to proceed. You might not be on the front entryway at any point, say, here are the authorizations, and afterwards stroll around the secondary passage and fundamentally open the entryway for them. These sanctions were like Swiss cheese because they were so porous. We focused on good deeds like taking a plane, boat, or house, but we didn't think about the structural things we needed to make the mandate that we think just needs to be done. As a result, Russia has completely circumvented the situation and its economy is effectively flourishing. Consequently, what we have gained is the complete opposite of what we attempted. In the first 4 months of the year, Russia's current account surplus more than tripled. Prices for oil and gas surged. Sanctions weighed heavily on imports and exports. If Putin were looking at this, he might think, wow, maybe I should be under sanctions more often. He might also consider which nation to invade next. Therefore, not only did our sanctions package fail, but the Treasury is also frantically searching for additional backdoors. We set the potentially fatal precedent by allowing oil to settle in currencies other than the United States dollar. And now Russia and China trade and settle in CNY, which is bad for us because this is not how the United States keeps its reserve currency. If you live in a country that has existed in some way, shape, or form, the borders may be hazy, but it has been around for hundreds or even thousands of years, and the people who live there think highly of themselves internally. They do not believe that their nation has no significance. Any endeavor to monetarily embarrass such a nation will, in general, have flopped previously and will proceed to fizzle, and their will in general. Other nations that view it as one of these things said, well, if them, why not us? And in a kind of backhanded manner, supported everyone. As a result, we find ourselves in an odd situation in which we pick fights that we can't win, and the consequences of us are really bad for the economy, while the consequences for everyone else to stay on the sidelines are like economic prosperity, which makes no sense. Thank you from Cash Street, where cash is always king.